Property prices are going up in 2020, but we're meant to be in the biggest recession ever. In this video, I'm going to break down for you what's going on with property prices in this recession, my 5 golden rules for understanding how property prices behave over time, and what property investors should be focusing on right now to stay ahead of the game. So stay tuned, a lot more to come. I'm Ranjan, Bhattacharya, property investor and developer for over 30 years. You may have seen me on the hit Sky TV show Property Elevator, or you may have attended the Baker Street Property Meet, which I host, the UK's largest meetup for property entrepreneurs. Now, I've been investing in property since 1990, and I've seen a few upward and downward movements in property prices. You're going to learn a lot in this video, so get a notepad and pen, and also smash that like button, because then YouTube will share this video more with people who are interested in this sort of content. We put out new content each and every week, all dedicated to helping you stay on top of your game. So subscribe and hit the bell icon now so you get notified as soon as we upload. So let's dive straight in. What's going on with property prices in this recession? It's official. We are in a recession, and we're in the deepest recession this economy has ever seen. Just look at some of these articles. Day by day, we're getting bad news in the newspapers. But the question is, why does everything feel so good? It doesn't feel like a recession, does it? Folks are on furlough during the day, too scared to return to their offices, but happy to go out to restaurants at night for their state-funded chicken and chips. It's all a little bit strange times, and much stranger than any recession that I've seen. There are bounce-back loans for businesses, state grants, business rate holidays, VAT deferment, and more. And of course, there's a stamp duty waiver till March 2021. All of this is like giving the economy 6 cans of Red Bull. The economy is rushing around on an incredible high. And coupled with all of that, there's been so much pent-up demand for property because we've been shut down for much of this year. And all this has resulted in the mini property boom we're seeing right now. For owner-occupiers who have been delaying a property purchase, it's easy to see why now is a good time to buy, especially when there's 0 stamp duty. The thing to remember is that everything you see in the media on property prices is aimed at owner-occupiers, not property investors. Owner-occupiers account for 90% of all property transactions. Property prices and the UK housing market is driven by owner-occupier demand, not by property investors. Owner-occupiers buy property primarily as a home to live in. Property investors buy property primarily, surprise, surprise, as an investment. So property investors need to view the market from an investor's perspective, not from a homeowner's perspective. And that's why a lot of what's published in the media is completely gumph from our point of view. So here's the thing, the economy has been pumped up on an artificial high right now with so much fizzy Red Bull. And it's going to take a little bit of time, probably next year, until that high turns into a low. When people come off furlough, when government loans need to be repaid back, when tax breaks start coming to an end, that's when this sugar rush high is going to come to an end, and we're going to see what resembles a normal recession. We'll start to see more unemployment, we'll start to see layoffs when furlough ends. And as well as more unemployment, we'll start to see business failures. And against this backdrop, how much more Red Bull will the government be able to add to the economy to make us all feel as though all is well? So what about property investors and people with property businesses? That brings me neatly on to my 5 all-time golden rules for understanding how property prices behave over time. And these 5 golden rules have really stood the test of time for me, and have been true throughout my 30-year investing career. Learn these 5 golden rules and you will understand how property prices behave over time, and you'll understand what's required to successfully play the property market. So let's get on with it. Rule number 1. After a period of boom, prices will always crash. Now, booms don't last forever. When you're in one, there are plenty of people rushing around thinking that the boom years are just going to go on and on and on. They never do. By boom, I mean periods of time where property prices are always going up and they are always above the long-term average for property prices. Savvy investors recognize this and do every deal as though a crash is around the corner. In a boom, it's very important to make sure that your property business is well run. It's lean, it's mean, you don't overgear, you maintain good cash reserves, and you also maintain a good credit rating. Rule number 2 is that after a crash, prices will always boom. Markets will crash and they will bottom out. But this period of doom and gloom never ever lasts forever. All a crash means is that for this period of time, there are more sellers than buyers. Property crashes are usually exasperated by an economic recession because in recessions, default rates rise and hence there are more distressed sales, more properties coming onto the market and fewer buyers with the cash reserves and credit ratings necessary in order to purchase those assets. That's why it's so important that when you're in a boom, you always operate as though a crash is round the corner and you prepare. In a crash, it's really shooting fish in a barrel. The imbalance between demand and supply is in your favor. You're looking for distressed properties which you can buy off motivated sellers and which you can add real value to in the here and now. And that's because when you're in a crash, you don't know how long it's going to last. You want to only buy properties which you can add value to immediately. So you can generate cash flow, get them refinanced, and move on to the next one without having to wait for a rising market to do that for you. So rule number 1, booms and rising prices never last forever. They always end in a crash. And rule number 2, crashes never last forever. They will always be a boom round the corner. But the third rule is something you need to remember. No one can time the market. You need to accept that no matter what you think you know, you will never be able to time the market correctly. All you know that a crash will be followed by a boom and a boom will be followed by a crash. But exactly when is anyone's guess. At any point in time, they are always doom mongers predicting a crash. The thing is, they are right. A crash will happen. We all know that. But what the doomsayers are unable to predict is the exact timing. Back in 2009, we all knew that the market boom wouldn't last forever and one day would result in a crash. But very few people knew how and when that crash would exactly be triggered. So just accept it. Timing, you'll never be able to predict that with absolute accuracy. And if you do happen to get it right, it's a fluke. Accepting that booms don't last forever, accepting that crashes don't last forever, accepting that you'll never be able to time the market, you need to take heed of rule number 4, which is buy well to mitigate the fact that you will never get timing right. So to successfully invest in property, you must mitigate the risk of unlucky timing when purchasing any property. The way to do this is always to buy well. In other words, never pay full market value for any property you buy. Always buy distressed property from motivated sellers at below market value. That's your only insurance policy, which allows you to invest continuously and never get caught short when the market and property prices change direction. Not understanding these golden rules is why many investors and developers go under as soon as the market turns. In boom times, their assumption is that the music will keep playing forever and prices will keep rising forever. They over-leverage, they borrow too much, and they do this because they're basing their borrowings on future expected price rises. If they're lucky and the music plays on, they win big. But if the music stops, they simply go bust. I've been investing in property for 30 years, and the only way you survive and thrive in the long term is to stick religiously to these 5 rules. So finally, what's the 5th rule? Well, it's be like Mr. Spock.
Fascinating.
What do I mean by that? Well, be Mr. Spock. In other words, take emotion completely out of the game. Don't get greedy in a boom and don't get fearful in a crash. Just stick to these 5 golden rules and let the numbers do the talking.
Don't say it's fascinating. No. But it is interesting.
So we've talked about the 5 golden rules for understanding how property prices behave over time. And these golden rules have just stood true throughout my 30 years investing in property. So what happens now? Knowing all that, what should property investors focus on right now to stay ahead of the game? So my philosophy is that you create your own economy based on what you do, rather than depend on what the economy does unto you. We all know that fortunes are made in recession. In real estate, fortunes are made by buying distressed assets and adding significant value to them. That's something which is in your power and not dependent on the wider economy. As badly run businesses fail, there will be more and more commercial properties coming onto the market. And now we have oodles of permitted development rights being introduced, which allow commercial buildings to be repurposed to alternative uses. Those who take early advantage of these permitted development rights will be able to repurpose commercial buildings and add significant value, irrespective of what property prices and the property market is doing right now. Remember, in a recession, you need to be picking up distressed assets, adding value to them, and holding them to benefit from capital uplift when the inevitable price boom happens. The planning system is going through massive change right now, making it easier for savvy, clued-up investors in the know to repurpose defunct commercial buildings without unnecessary red tape, and thereby add capital value to the property in the here and now. The skill will be in knowing how to identify those rough diamond commercial properties by quickly spotting their repurposing potential and knowing how to avoid those commercial properties which you simply won't be able to do anything with. Now, I've been repurposing defunct commercial properties since 2005, but I've never seen such a wealth of opportunity that exists right now. If all this sounds of interest to you, and you want to know a little bit more about this goldmine opportunity in repurposing commercial buildings to alternative uses, then this Sunday I'm running a free 90-minute web class on the subject. I'll share with you through real-world examples how you can find commercial properties which are right and ripe for repurposing, and how you can create real value uplift no matter what property prices are doing right now. I'll also share with you how you can take first mover advantage with some of the newly introduced permitted development rights which are coming on stream right now. To find out more and to register, join me this Sunday for 90 minutes of free training. The link's on the screen and in the description below. Now tell me what you think of how you're going to play property prices over this coming period. Tell me what you think about this Red Bull high that we've got right now. And tell me whether you're a fan of repurposing commercial buildings into alternative uses. Tell me what you think in the comments below. Also smash that like button. It helps us out on YouTube. And subscribe if you're not already subscribed, and hit the bell icon for our new content. See you guys on our training session this Sunday. Bye for now.